Hi everyone, welcome to our continued series on CMMF. My name is Wamboi Weru, Principal Officer of Cytonn. Today I'm joined by
Kevin Karobia, Investment Analyst.
Okay, we continue with this discussion on saving and investing. As I said, we're going to continue with our discussion on money market products. Now, there's a lot of mix-up in the use of the words saving and investing. Today we'll have a bit of emphasis on the element of the power of compounding interest. Now, without taking any more time, I want to invite Kevin to now explain to our audience these principles that we hear out in the investing world about simple interest and compounding interest, and why it is important for you as an investor. If you're out there looking for a product to invest for CMMF, money market that is, how do you choose that fund manager who gives you the best return for your money, and as we said, so that you can beat inflation and that your money doesn't lose value in terms of its purchasing power. So I want to welcome Kevin at this point.
Thank you, Grace, for inviting me to this series. When I think about compound interest, one of the things that comes to mind is one of the famous quotes by Albert Einstein on compound interest is the most powerful force in the world. And he added on to say that he who understands it earns it, but he who doesn't pays it. Because compound interest, once you understand the principle and the guiding factors around it, you'll be able to invest your money in a way that your money continues to work for you long term. But on the other hand, if you don't understand it, you might be borrowing from a bank where you're paying the loan on a reducing balance. Compound interest on a reducing balance means that you are going to pay out more. Looking at compound interest is the interest that you are earning together with the principal and the interest earned, for example, in the previous period. Because how compound interest works is, for example, for today, I will invest principal, let's call it 1,000 Kenya shillings. I'm earning 10% per annum over that day. Tomorrow, under compound interest, my principal for tomorrow will be what I've earned, my principal for today, coupled with the interest I've earned will be my new principal for the next period or the next day. So this ensures that on a constant, your interest is also earning interest, and over time, then you can realize value over compound interest, which you will realize is much better than simple interest.
Thank you very much, Kevin. I have a question for you, because we know that even in the market, a lot of people may not read information about compound interest, investing. So if I am an investor out there, what are the things I should be looking out to make a decision in terms of I can go with this CMMF product that I've been offered and I've been told it has various features? What would you highlight as the unique features that will attract that client to the CMMF product?
Looking at it, the first thing is the interest earned. Because as you've rightly put out, we are in a period where we are experiencing high levels of inflation. The purchasing power of our money is being eroded. So one of the things that an investor should look out to is to ensure that the return they are getting from their investment avenue is beating that inflation rate. Because if you get a return of 11%, take away inflation of 9% in the month of January 2023, then it means I have a real return of 2%. If, on the other hand, I invested in an investment avenue that gave me, call it 8%, 8% is lower than the current inflation rate. So that would mean that my money is not really gaining value, but it's being eroded over time. And one of the most compelling factors around compound interest is the time. Because as you continue to invest over a long period of time, that's when the power of compound interest continues to shine upon your investment. So once you combine the time as well as the returns that are beating the inflation rate, then that means that your portfolio or your investment is gaining value over time.
Thank you, Kevin. So the way I understand it, and for also our audience, is look for first a fund manager who's offering you a money market that has compound interest. Not just that, also go into the details. Are they compounding on a daily basis? Are they compounding on a monthly basis? For the CMMF, the compounding is on a daily basis. If you request for a statement, it can show you that return. That means, as Kevin has explained, if I put my money in and it starts earning an interest from tomorrow, we say T+1, meaning if I get the money today, I won't invest it today, I'll start investing from tomorrow. That means by the third day, the amount that I'll be seeing in my statement will be the principal plus the interest I earned, and then now on the third day, those two amounts is what now will be calculated for interest. That's number one. Are they compounding on a daily? Are they compounding on a monthly basis? And then number two, what is also the actual return that you're getting? As Kevin has put it very well, check that the return you're getting is going to beat inflation. It's well and good to have said you've invested, but the investment you're making, is it beating inflation? So thank you so much for joining us today, and we welcome you to continue watching our videos as we continue to talk about investing in the CMMF.